We have discussed a lot of technical strategies, but today is also the Bank Nifty weekly expiry day, and therefore some F&O cues as well for you. Manoj Muralidharan of Religare Securities joins us now. Good morning, Manoj. The first question obviously is the Nifty Bank. What's your trade today?
Good morning, Lata. Lata, I guess every time the Nifty and Bank Nifty, they align in a direction, we get a trend which has got good strength. But ideally, if you see, it was day before that the Nifty managed to put in some 4%, but those open interest got fizzled up with a 50-60 points rally. So we believe that both the indices, your Bank Nifty and Nifty, might face some hurdle and possibly get into some distribution. The levels for the Bank Nifty would be somewhere close to 27,680 to 750. We are expecting the distribution to start between that range, and the stop loss should be, let's say, 150 points on the upside, and the settlement or the target on the downside would be somewhere close to 27,400. For the Nifty futures as well, we believe 10960 to 60 to 80 is where we recommend selling a Nifty future with a stop loss, let's say, a 60 more points, 11,040 to 60. And we are expecting the weighted average price of Nifty, which is a 10,860, to be the target on that.
Okay, what about individual stocks? What would the calls be there?
Good morning, Sonia. Sonia, I like India Cements, and we believe there is good buying which is happening in the cash market, and we might see a follow-up trade as well. So buying that somewhere close to 87 to 88, the stop loss should be, let's say, 83 to 84, and we are expecting the stock to hover around the 100 odd points. So somewhere from 98 to 100 is where we believe the target can be. The second is we like Dabur as well at 420 to 422. We recommend buying that with a stop loss of, let's say, 409, and we are expecting a good 30 more points on the upside. So somewhere close to 448 to 450 should be the target on Dabur.
Okay, Manoj, thank you very much for giving us your F&O trading strategies, especially the view on Nifty Bank. Those were all trading strategies for you. Let's zoom out and give you some macro opinion as well. Brexit has so much been in the news. Theresa May, of course, has won the confidence vote, so one should be expecting another a renegotiation. What does all this mean for global markets? We spoke with someone who has watched these markets for over 4 decades, Martin Wolf, the chief economics commentator at Financial Times. He spoke with me yesterday. Here are a few views that he has on Brexit and its impact on financial markets, on US-China trade talks, global economy. Listen in, we are back.
The simple truth is that Britain is not an enormously important economy. It's perhaps the 5th largest, but it is really quite a small economy, and this is essentially a crisis that concerns Britain. So if the worst comes to the worst, the pound will fall if we crash out without a deal, and British financial assets will decline. But my own view is this doesn't look like a really significant world event, and I wouldn't expect it to lead to a massive financial turmoil. Mr. Trump is wildly unpredictable. Nobody really knows what he wants from China. My guess is that this 90 days period will not lead to a resolution with China. They might say they've made some progress, but many of the big issues that the Americans have insisted upon, which are really radical, will not be agreed to by China. But there is a possibility, and that's what happened with the NAFTA negotiations, that the Chinese will offer enough to Mr. Trump that he feels he can declare a victory. He knows that his supporters don't understand the details anyway. He can declare a victory, he can say we got everything we want, and in that case the dispute will be over. Underlying growth of the economy is closer to 2% potential growth than the 3% or so that they were talking about, possibly even less than that. The growth, inflation is well under control so far. We're not seeing any problems there. And what the Fed wants to do is to get growth round to that sort of level, and that seems to me where it's going. That's not a problem. Unemployment is very, very low. Basically, we're seeing the US move from a very strong cyclical upswing to a slower long-term trend growth with what will probably continue to be very modest interest rates, because essentially the economy can't stand higher interest rates than this.